London and Dubai are two of the world's hottest property markets today. We've seen that in the opening of Cityscape yesterday. Both are effectively fighting on the global stage for investors interested in real estate as an asset class. But almost as importantly for London is that one of their biggest source markets for funds, the Middle East, is increasingly looking to Dubai to put money into. To walk us through the dynamics between the two cities, I welcome to the studio Robert Bartlett, London-based CEO of the 208-year-old multidisciplinary property business, Chesterton. Good morning to you, Robert.
Good morning. Morning, Malcolm.
You can explain later what a multidisciplinary property company is, but first, Dubai and London. How big is the competition between the two now?
Well, I think the interesting thing between Dubai and London is actually they're both vying for the same sort of safe haven status, which we hear a lot about in the news and being talked about in the markets at the moment. In that, London has seen a huge influx of overseas capital into it since 2008, 2009, in fact. I mean, the London market barely took a breath when the financial crisis took hold in 2008. There was a little stutter for a few months, and then effectively overseas capital has poured into the London market, and that's led to sort of buoying it up and the growth that we've seen in that market since that time. So,
have you spoken to anyone? Have you got any sort of evidence, or that perhaps you've spoken to people who might have put money into London but are now putting it in this region, perhaps into Dubai?
Yeah, I think what I'm seeing interestingly here, comparison between our businesses in the UK and Dubai now, is that both are attracting a lot of overseas investment into it, and we're seeing a lot of, for instance, I mean, in last year across the entire London market base that we operate in, about 68% of all buyers into that market were from overseas, and we're now seeing a lot of foreign money coming into the Dubai market from the other regions within the GCC and the MENA region.
Yeah, I think it's pretty well documented, isn't it, the fact that a lot of buyers here will be in central London. Are you seeing that they're willing to dip their toe outside of central London at the moment?
Central London is an expanding concentric ring from Hyde Park outwards now. 3 or 4 years ago, it would have been very hard to persuade anyone from this part of the world that central London existed beyond Mayfair and Knightsbridge, and now it's quite clear that they're looking well beyond that. And recent examples of that is, we've been involved in a development which far out of London as Croydon.
It's outside the M25, even.
Which effectively is, it's right on the edge of the M25, and that development sold extremely well, principally to buyers from the Middle East.
What do you think is driving them? Because, of course, valuations are very rich, as you've said yourself. They barely stuttered. Has it been the weakness in the UK pound that has helped make it more palatable, or people just getting maybe properties becoming available, the property that they always wanted, say, in Knightsbridge?
It's a combination of factors. In fact, what has driven prices so much is the huge shortage of supply of stock. So the demand is immense, but the supply of stock is very limited. And of course, it's very hard to go and build new homes in central London. So that, as a combination, the vast amount of money that's been coming in, the weakness of the UK pound, and of course the sort of politically benign environment in which people anyone from anywhere in the world can buy property in London, and they know that effectively it's going to be safe. It's not going to have any sort of dramatic government sort of influence on it. They can see it, they can touch it. It's like buying a bar of gold, but this one you can live in and you can rent it out if you really wanted to get an income off it. A lot of people, of course, don't. They just own it and probably rarely even go and see it.
Like many cities around the world, for some reason, the west end of the city does better than the east, and that's true of many cities around the world. London's always been that way. People tend to look west, and the west side of London is more popular traditionally than the east side. What effect has the Olympics had on that, and the regeneration around the stadium and the new developments there, the athletes' village, etc.? Is that a good area to buy? Is that sort of, are you seeing upward growth there?
Yeah, I mean, possibly one of the largest growing markets in London is in the borough of Hackney, which is in that part of the world, which, from what we can see, just this year alone has gone up about 13% in value, just in that borough. 3 or 4 years ago, no one would ever have believed that was going to be the case. But
Yeah, and we've been talking maybe about properties for personal usage more than commercial reasons, but when you look at your latest report, there is a big difference regionally within the UK in terms of prices and how much they've recovered or not, as the case may be. Are you finding that maybe more investor-orientated people from this region are looking out to maybe buy, shopping centres or residentially more interesting areas because they think there's the chance of a bigger rise, particularly given, say, things like the IMF upgrade of the UK growth forecast today?
Well, secondary commercial outside of central London and outside of the sort of the main city is now becoming a more attractive asset class, and that's for certain. We're seeing yield compression coming in there, yields of in excess of 10 or 11% 3 or 4 years ago are now down to 7 or 8%.
Talk us through yields. There was a report out from Jones Lang LaSalle yesterday saying that real estate yields in Dubai have compressed, leading to the creation of a seller's market here. London yields, what, about 3% here, maybe 7-8%. The two perhaps getting closer.
Yes, in London, of course, you've got the difference between the residential yields and the commercial yields. Residential yields now in central London are right down as low as slightly below 2% even in prime central London. Whereas if you're outside of the prime central boroughs, they're still around 4 to 4.5%, possibly 5% in some parts. Whereas commercial yields for prime commercial are 3.5% to 4%, but secondary yields are still 7 to 9%.
Robert, I'm interested in your take on property bubbles. I know it's such an overused word, but you've been basically in the middle of London, which some would say has become a property bubble, the prime central London. Obviously, that allegation is made here in Dubai as well. You move between the two on a consistent basis. How nervous are you about both of those markets?
I think at the moment we're still seeing some pretty steady concerted growth in both marketplaces. I think it's all about the amount of capital that is coming into these areas, and whilst that amount of capital continues to increase, which is what we're seeing both in London and in Dubai, then the markets are very sustainable. Of course, the key difference is that in the London market is very much constrained by the fact that there is very little new stock coming on board. Whereas, of course, that is something which will be very different here in Dubai. There's going to be a lot of new stock coming in.
Two questions, very quick questions for anyone interested in buying here. Foreign investors still exempt from capital gains tax in London?
Still exempt from capital gains tax in London.
What about tax levels on rental income earned?
Well, the tax for if you're a non-dom, then you have different tax rules to UK citizens. Of course, what you do have to look out for now in London is that the annual property tax on properties valued over £2 million, if they're not owned in your own personal name, if they're now owned in offshore vehicles, etc., then of course they will be subject to a degree of taxation.
Yes, and that's been a major issue for people in this region. Also, the time that people can spend in the UK, that is being very closely guarded now, isn't it? They keep changing the legislation, and people inadvertently may go home for the summer and tip over in terms of the balance of time they're allowed to spend in the UK without becoming a tax resident. So do you find that you have to advise people on that as well?
Well, I think that's something that we would always very much recommend, that they take proper advice from their tax advisors and accountants, because clearly that's not our expertise. But you do have to be careful. You've got to watch out what you're doing. It would be irritating to be tripped up by something as just as benign as spending too many days on a holiday.
There was an interesting statement out the other day from Khalaf Al Habtour of the Habtour Group. He's the chairman of the group. They're building 3 hotels and 3 residential buildings in a big plot near Safa Park in Dubai. He's been quoted as saying that he doesn't want to sell the residential VIP apartments, the penthouses at the very top, but that if he did, he wouldn't let them go for less than $250 million each. I mean, that's twice the price of New York's most expensive apartment, and I think it's about $50 million still than the most expensive apartment in London. Are those sort of prices achievable in a market like Dubai, or anywhere really? I mean, is there a global property boom that will see even oligarchs digging that deep, do you think? 250 million?
Look, these numbers always continue to astound me, and I'm sure everyone else in the world. I think when people were talking about £135 million for buying an apartment on the top floor of a building in Knightsbridge.
That's the Hyde Park one, is it?
Hyde Park.
One Hyde Park, yeah.
Absolutely. Everyone said it was never going to happen, but sure enough, they sold them. Somewhere out there'll probably be someone who's prepared to pay some stupid money for an apartment, but they may not see it as being stupid money. They may see it as being good value.
And who knows? In 5 years' time, we might be saying, "What a great investment!" They only paid $250 million for that. You just never know.
Exactly.
Robert Bartlett, the CEO of Chesterton. Thank you very much indeed for your time this morning.
Thank you very much.